What is up, Eagle investors? I hope everyone's having a great weekend. Welcome to another episode of Eagle Investors Market Recap. We have a lot to talk about this week as well as next week as well. I'm joined with Samuel. This is a great time to bring Samuel on board, especially with so many earnings coming out next week, and talking a little bit about the earnings that happened this past week as well. So to jump right in, the Russell 2000 is outperforming the S&P 500 by approximately 1.3% for the week to date. And moving into the month performance, we are still seeing the outperformance of the S&P 500 by approximately 3% for the month. Something to keep in mind is I like where the Russell 2000 is trading at for buying opportunities. So if you're looking for a swing play, I would look into potentially looking into IWM overall as well. Now, in terms of important economic data that came out this past week, U.S. initial jobless claims actually came in a lot lower than expected, meaning that we're seeing the economy start to pick back up. We're seeing, in particular, within the services sector, we're seeing the labor market start to pick back up right there. So it'll be important to see if it can translate to specific value plays. I think the airlines industries, the services, it might be one of the key places where we'll see a lot of contributions due to this economic recovery. And also keep in mind, for example, department stores might see an uptick in as well, with a lot of pent up demand and a lot of savings that have happened over the past year. I think we can see a lot of activity as a result of many of their the stimulus coming through, as well as a lot of pent up demand going into the summer. I think this summer in particular, we'll see very strong growth within the United States, especially with the vaccine rollout and things trying to come back to normal. Now, it's a specific economic data point I talked about last week was about how we saw many U.S. homes opening up. Now we're seeing we saw a large uptick in U.S. new home sales as well. So I just wanted to revisit that and talk about the fact that we're still seeing the housing market continue to grow significantly. So keep an eye out on this. Like I said last week, there are many names that have been able to run up, such as Home Depot, Lowe's. We saw a large uptick in timber prices as well. So that's something to definitely keep an eye out on. And also there are specific locations where we're seeing these specific growth rates along the Sun Belt region, as well as in specific cities as well. We're seeing a large uptake in Texas, Georgia, North Carolina, and many more states. So something to definitely keep in mind, especially if you want to look into specific REITs residential REITs that trade along those specific regions as well. Now, in terms of the 10-year, we saw the 10-year yield trade almost sideways around that 1.55 range. So it shows that we're not seeing any significant expectations for an increase in inflation. So that's something that's been on everyone's radar. So something to continue to watch. I know this week we're seeing PCE results come out. So see if there's any impact on if there's higher than expected inflation numbers. Are we going to see the 10-year continue to go up, and could that hurt tech investments? On the note of tech investments, we actually saw this past week Joe Biden's administration come out with the potential proposal for almost doubling the capital gains tax rate for wealthy Americans. So I think we could see, if that were to go through, a dramatic impact on many of these growth names, especially some of these FANG names. So that's something to watch for. I personally believe that we won't see it double per se, but we could see a potential increase in the capital gains rate. Samuel, do you have anything to add on that? No.
Yeah, definitely. Definitely a big concern if we think that it might actually get passed. But as you said, it's very unlikely at those current rates. That said, it will be very imperative to keep an eye on this 10-year, as well as these core PCE numbers or coming out next week, and the implications that it might have on equities, particularly the tech sector and this continued rotation from growth to value. Now moving on, I know, we can talk about, oh yeah, so the expected consumer PCE coming out next week. If that is higher than expected, as you said, and we do have a greater, we do see increase in inflationary expectations, we will see likely the 10-year rise, and we'll see pressure on these tech names and these FANG names, and the overall momentum plays.
And then another thing I wanted to mention is we did see a tiny uptick in gold that I mentioned last week. I still think there's a buying opportunity for gold, and I just wanted to hear what your take is. If we do see those inflation numbers come back up, could we potentially see gold continue to rise?
Definitely. Gold actually broke a critical technical level recently, and it was with the help of the 10-year settling and being a little more range bound at this 1.55 level, as you mentioned. And what this does is it means that real yields, which are really detrimental to gold, when real yields are rising, real yields have been stable or trending down as a result of the 10-year movement. So as you mentioned, if we do see a greater increase in inflationary expectations, that's very bullish for gold. If we see yields stabilize a little bit more, that's also bullish for gold at these likely very oversold levels. As you see on this chart, the past few months, gold has just trended down from these fears of rising real yields and the general euphoria that we saw in July to around the September months. But I do agree gold looks very strong at these current levels. If it can hold above around the 1765, 1760 area and zone, it's very favorable for equity positions in something like GLD, or you could look into options as well as futures.
Yep, for sure. Definitely a name to GLD is definitely a name to have on your watch list overall as well.
One other area actually I forgot to mention is the gold miners, which have actually been much more oversold than GLD itself. So you could see, if we do see gold continue this reversal and trend up among these expectations and technicals, I would likely expect an outperformance in gold miners. And an easy way to gain exposure without picking through and sifting through one name over another would be the highly liquid GDX ETF.
And something to keep in mind with gold miners, it's that going into gold miners as a way to leverage yourself. Many of these gold miners tend to outperform the spot price for gold. So that's something to keep in mind as well if you're overly bullish on gold overall. Now, U.S. GDP estimates are actually supposed to come out next week, the first estimate. So that's another economic data point to keep in mind going into next week as well. Now, I just wanted to go over specific earnings plays, any earnings plays from Samuel as well. I know he's going to have a lot of ER spreads coming through next week, so that's something to definitely keep in mind. So Samuel, if you want to pull up the historicals, I can pull up some of the technical analysis that I'm seeing as well for some of these names.
Definitely. And one thing to also add is, we tend to favor these credit strategies over earnings with volatility contractions from the prices of the options being bought up and bid up from hedgers as well as speculators in these names. So let's see. First up, we have Tesla earnings coming up. And if we look at the historicals, Tesla was for Tuesday after or Monday after the market closes. It should be releasing, And Tesla has really risen this past year, as you're all probably very aware of. And what we see is pretty volatile earnings, but the past few quarters has been relatively stable, as a lot of the move and expectation is kind of baked into the price with such a momentum and growth name as Tesla and the way it's been moving. The earnings themselves might not be the big binary event that you see in other underlyings. That said, expect to see a lot of movement before and after. So do you want to pull up any of the technicals on Tesla?
So what I'm seeing here for Tesla, I'm not seeing at any dramatic resistance or support at this level. I'm seeing resistance for Tesla around that 780 range, and then I'm seeing support for Tesla at that 675 range. So that's something to watch for as key levels. I know, as Samuel said, for the past 4 quarters, we haven't seen dramatic moves. So we could potentially see premiums get killed this earnings if we don't see a dramatic move. And I personally don't expect any dramatic moves for this quarter at least.
Perfect. So next up here, let's look at the technical, well, let's look at the earnings history for Microsoft, which is coming out Tuesday after the market closes. And Microsoft is a name that generally has very, very strong earnings as well as guidance, and has done exceedingly well the past many years. And we see that there's around a 63% chance that the underlying or the stock moves up the following day. And you might think it's like a 50-50 chance for all names and all days, but this isn't really the case, whether it be just general guidance or how some companies continually outperform the street's expectations. We do tend to see that with Microsoft. So playing something like credit put spreads on Microsoft can typically prove to be favorable when the conditions appear relatively stable and there's no technical red flags.
Yeah, and moving into what I see technically for Microsoft, it has run up a little bit in the past, so it is nearing that overbought range. I personally don't think we'll see a dramatic move. We're seeing major support at that 253, 254 levels, so that's the level to watch for. I personally don't think we'll see a dramatic move after earnings for Microsoft. Typically, the most we might see is a 4% move after earnings.
Definitely. Next up, another one we're going to highlight. There's so many that we could, but we have Boeing, a favorite, but a name that also has been trending down the past few weeks after rapidly spiking up, which I'm sure we'll get into on the technical side. But on the earnings data and earnings history side and kind of what to expect, we do see relatively stable earnings and how they have moved around earnings, as a lot of the moves in Boeing happen on more spontaneous occasions, from depending on what's happening with their planes or orders or any types of mishap. But what we have seen the past few quarters is a slight misses and a few percent down, but nothing too drastic. So you can kind of go either way on this earnings, depending what you really think on the technical side, as well as the current price level of the stock. And I personally like Boeing for the long run, and also at this current level, it seems to have found some support, but we'll see what we see in the charts.
Yeah, I personally think Boeing is nearing that support and could be a buy at these levels. In terms of things to watch for outside of the technical analysis, I think that something that could play a factor is the airline earnings that we saw in the past week. It could potentially be baked into the price already. We didn't see great earnings come from Delta as well as American Airlines. Those companies primarily focused on their guidance. So it's going to be interesting to watch if we can see those new orders continue to come in, and what what management provides for guidance on Boeing. I personally love it as a longer term play, and as we see some of these value plays continue to rebound, I think Boeing's one of those names that could potentially lead the pack as well. So and earnings to watch for Wednesday before open.
Yeah, especially in this name when it's found some support and could need this value play to lead the pack. Earnings could be the catalyst that will start this reversal, but we'll see. Next up, we have Apple earnings, which are coming out Wednesday after the market closes. Yeah, along with Facebook, and a lot of the big tech names are coming out this week. We also have Amazon and so many that we can cover. But in terms of Apple, they're known to almost always beat their expectations, as they're known to set very conservative estimations on their revenues and on their profit each quarter in their guidance. So that's not what's really important, whether they beat or they don't beat the expectations, as the buy side, the streets buy side expectation have their own numbers that they're really watching. So if we look at the price action, though, that's a little more telling than continuously beating on an EPS and revenue basis. And we do see relatively bullish earnings data in these numbers, but we also see sometimes, buying like just calls all out isn't going to always work, even if they're probably going to beat their EPS. And this can mean that a credit strategy or a bullish to neutral position could be favorable, especially in Apple at these current levels. We also saw a lot of these FANG names, including Apple, trend down after they were really spiking up a month and a half ago about, and currently they're being pushed back up, and they might be seeing new highs, and it could be led by these earnings. So that'll be something to watch as the NASDAQ continues to push up, as yields are stabilizing. And we'll see if the really big names like the Apple, Microsoft, and Amazons can lead the pack once more and really provide another leg up on the market.
So as Samuel mentioned in the past, like we haven't seen too many dramatic movements with Apple after earnings, so that's something to definitely keep an eye on. I personally see Apple as potentially overbought at these levels, so could potentially see a small move down. I'm seeing support at that 130 level and major resistance around that 138 to 139 level. It's trading in a smaller channel now, but it could break out of the channel, especially after earnings. So that's something to definitely watch for.
Next up on Friday, we have Exxon Mobil coming out with earnings before the market opens. And Exxon Mobil has been relatively range bound the past month after running up, along with crude oil prices, which have been steadily rising with a recent pullback and correction below the 60 handle, but now seems to have stabilized for the time being. And something to watch with Exxon Mobil is generally more neutral to bearish in terms of earnings, but it will largely depend on where they're seeing guidance in terms of not just oil prices, but profitability and where their actual operations will be moving. That said, it's definitely a name to watch for the oil space, and keep an eye on crude oil prices as well as the general like XOP ETF. If you're playing any of these XOP, XOM, or BP also has earnings on Tuesday before the market opens. So that could also give some indication to how ExxonMobil is trading.
Yeah, Exxon's been a name to watch, especially with crude oil prices starting to recover. Main thing to watch in terms of crude oil prices is the demand that we're potentially seeing with the economies reopening up. I know we've seen some setbacks, which have hurt crude oil, especially within Europe and internationally. We're seeing vaccine rollouts be very hard in those regions. So it's drawn down on crude oil. So that's something to watch for. Right now, from what I'm seeing is it could be a potential buy opportunity here. We could see a move higher here. It is trading in a smaller channel currently with support or resistance at a first level of resistance at 56, then major resistance around that 58 level. then we're seeing support around that 52.5 level. So those are levels to watch for with Exxon Mobil's earnings that are coming up.
Definitely. And then just one thing to also note with all these earnings coming up is the potential market implications and the market impact that these could have if we don't see like a wide mix of earnings across the board, particularly in the tech and momentum names from Tesla to Google, Amazon, Apple, Facebook, and all of them, then we might actually see either a leg up or a leg down on the entire market. This could be the push to make new highs, or it could be the reckoning that brings us down from continuous new highs that we've been experiencing the past few weeks. So any thoughts on that and where the market might go depending on what kind of results that we see?
I think the major thing to watch for is potential volatility with a lot of these names. With tech in particular reporting earnings, we could see volatility in the S&P 500s as well as the NASDAQ. So that's something to keep in mind. And then we're seeing some industrials and value plays reporting earnings as well. So we could see a lot of volatility in that market, in the market this week. So make sure if you're trying to leverage yourself in specific options plays, understand that there could be a lot of volatility. And also, if you're not looking to risk as much, the cash is always a position. And something that we recommend a lot of new traders is making sure that no position makes up more than 5% of your portfolio, or you could be overexposed to a specific play. So that's something you have to definitely watch for, especially when you're trading options on some of these names.
Definitely. And then also be aware of how your positions work together. You could have 5% of your position or no more than 5% in a single position, but if they're all long calls on big tech and momentum names, that's going to be a lot more correlated than you might think. And you might think you're diversified, but you're actually not diversified at all. So mixing up those bearish, bullish plays, delta, mixing up your debit and credit positions, as well as not being just over leveraged in general.
Yep, and you can look into like the correlation for specific plays as well. So, for example, if there are earnings that are coming out for Apple, we could see an impact on the other FANG names as well. So that's something to watch for as well. And then many of the names in the same industry report at the same time, so you could see an impact within this whole industry as well. So definitely watch for that, and have a great earnings. Overall, we're going to have a lot of trades out, and I'm sure it's going to be entertaining for listening to all the earnings calls, as well as looking into future guidance earnings, and as well as seeing the top line sales figures as well. Thank you for joining. If you're not already a part of our Discord server, make sure to join with the description, and the link is down below. If you haven't already liked this video, make sure to like it, ring the notification bell to get notified whenever we post any YouTube videos. And as always, leave any suggestions for future video ideas in the comments below. Anything else to add, Samuel?
That's all. Thanks, everyone. Make sure to subscribe as well.
Thank you.